Take on the Investment Show with our host, Dax White. Dax White is the managing partner of the White Law Group, a national securities fraud, securities arbitration, and investor protection law firm with offices in Chicago, Illinois, and Vero Beach, Florida. The White Law Group has represented hundreds of investors in FINRA arbitration claims against their brokerage firms, and throughout this show, Mr. White will shine a light on some of the tricks of the brokerage industry, while also providing valuable information for investors on how to successfully navigate the investor-financial advisor relationship.
Good afternoon, everyone. I'm your host, Dax White, and you're listening to Wall Street versus Main Street. This is a different take on the investment show. I am not a financial professional. I am not registered to sell securities, and that is not the purpose of this show. The intent is not to provide investment advice, but rather to provide information that I've picked up as a securities attorney representing investors in claims against brokerage firms, information that I've picked up over the years that I think will be valuable to investors to help even the playing field between you and your financial advisor. The brokerage industry is not unlike any other industry where there's good ones and there's bad ones. And I think it's important for investors to have some understanding of who they're dealing with, what the registration requirements are, the kinds of questions you should be asking so that that can be a successful relationship. We see in our practice some of the worst situations, but the reality is a financial advisor can be one of the most important professionals that you hire to make sure to set you up for a productive retirement, to grow your assets so that you can live out your life the way that you want. That person can be very important, and there's great ones out there. And so to me, when we see all these various situations and there's things in my mind, I'm thinking, man, I really wish they'd asked this question, or I wish they had known this. That's the type of information that we're going to try to pass on in this show. That's the purpose of the show, is sort of, like I said, to shine a light on some of the tricks of the brokerage industry so that you'll be prepared and you'll be ready to ask those questions. So each week we'll sort of dive into a specific topic, some of that information that I touched on. And this week we're going to talk about registration requirements because the reality of a financial advisor is they're not all created equal. There's sort of the bare minimum requirement. Here's what you need to go out and sell securities. And then there's levels beyond that that suggest far more expertise. And obviously, if everyone who was meeting with a financial advisor had that information, it would seem very clear to me that you'd go with the one who had more training, who had more experience, and had gone through the coursework to make sure that they have the knowledge that you would need. The brokerage industry, at the end of the day, it's sales. And the minimum requirement to get into the brokerage industry is very low. And unfortunately, I think the expectation of investors is that they are dealing with somebody who is, a financial guru, or somebody who really understands the markets, or, is very finance savvy, or really good with investing, or what have you. And unfortunately, that's not always the case. And again, it goes towards sort of the bare minimum requirements for getting into the industry. And what are those? The main registration that any broker must have to sell a security is called your Series 7. And that's an exam that you take usually at the very beginning of your career. Let's say you graduate from college and you get brought into a training program at a large brokerage firm like a Morgan Stanley or a Ameriprise or one of these. What they're going to do in those first few months is they're going to give you some base knowledge. They're going to set you up with a course on investing, give you some materials to read, and you're going to take the Series 7. And usually the ramp up before you take that is a month, maybe 2 months. And the knowledge that they're testing on that exam is very basic. What's a security? What's a mutual fund? What's a bond? What are the different features? Pros, cons, commissions, all that kinds of information. Stuff that, frankly, you obviously need to have that to be in the industry. And my goodness, I promise you, investors who are dealing with a financial advisor would expect your advisor to have that information, but the bar is relatively low. It does not suggest expertise if you pass the Series 7. It doesn't put you out there as somebody who has a full grasp of the market necessarily. It's just a baseline exam just like you would have on any other base. I mean, not, I'm a lawyer. I'm also a securities lawyer, just by virtue of the fact that this is the type of work that I do. But the bar that allowed me to become an attorney just tested, baseline knowledge of just being an attorney generally. It doesn't necessarily make you an expert in any particular area of the law. It doesn't at all. And the Series 7 is similar to that. That's your baseline requirement that allows you to sell securities. What you could get beyond that, which now we're getting into actual expertise, lots of training, and it usually takes about 5 years of experience in the industry, is what's called your CFP. That's a Certified Financial Planner. And that has a much higher bar in terms of getting that accreditation. Series 7 allows you to sell securities, but to put yourself out there as a CFP and add that CFP at the end of your signature block requires far more than your 4-week, ramp-up course after you just graduate from college. Some of those requirements include, I think it's 5 years work experience in the securities industry in that field. There's education requirements, whereas, I would say that most brokerage firms probably do hire college graduates. It is not actually a requirement for passing the Series 7. It is a requirement, I think, for CFP. You do have to have that college degree. There's also an exam that's involved that is far more difficult to pass than the Series 7. I don't know the pass percentage of the Series 7, but I would say it's well more than 50-50, whereas the CFP, I think, is more in line with like a bar exam for becoming a lawyer, where it is much more difficult to pass and suggests a far better grasp of the market. So that's something I wish more investors knew. If you're taking a meeting with a financial professional who wants to sell you securities, and you had some understanding of, okay, obviously he's got a Series 7, he's registered, he shouldn't be selling me securities if he doesn't, but who I really want is this guy who has the CFP, because that person's got 5 years experience in the business. He's taken more exams to suggest that he has a better understanding of the market. The other thing that's significant with that CFP is the duties that person now has to you. Somebody who has a Series 7 who's registered to sell securities has the baseline requirement when they make a recommendation, which is that investment be suitable for you. And suitability is based on your investment experience, your net worth, your income, your assets, and your investment objective. And the requirement of a financial advisor who's got his Series 7 or her Series 7 is only that the investment recommendation they make for you is suitable based on those factors. So let's say that you want to invest $100,000 and you're looking to, get into the market, but you don't want to put it in one thing. You want to spread it around. And so, a financial advisor is probably going to suggest, okay, let's buy a mutual fund. Mutual fund allows you to do that. You can invest in the market, but it's multiple equities in that particular mutual fund. So that'll diversify our risk a bit. A Series 7 financial advisor can pick a mutual fund that is suitable for you. It fits into those objectives in terms of what you want, but maybe it pays a 4% upfront commission, which is much more in their interest than yours. Whereas a CFP would be required to make a recommendation that is both suitable and in your best interest as opposed to his or her. And so obviously that's the standard we want. We want to make sure that this person is looking out for you, making a recommendation that's both suitable for you, but also in your best interest. And I think that's something that not every investor who has a broker realizes, is that those two things don't always line up. And so if you're working with a CFP, you at least know that that's their duty. Now that's their requirement. That's somebody who is a certified financial planner. So the investment, not just that it has to be suitable, but it's got to fit into your investment plan. And they can actually draw up financial plans for you and say, okay, what are our long-term goals? What are we trying to do? Are we trying to save for college? Are we saving for retirement? Are we trying to grow it so we can start a business? What are our goals? And they can put together a financial plan to make sure that you meet those objectives. So it's not just a sales position where they're trying to sell you a particular product. A couple weeks ago, we had my associate come on. He's a securities attorney that works in my office, but prior to going to law school, he was a financial advisor with a major brokerage firm. And he talked about how for the first year, 2 years, he was pushed very aggressively to sell particular products. He would have been somebody who just had a Series 7, having luncheons, trying to meet people, trying to get people to invest with him. And part of the reason he went to law school and part of the reason he did not pursue being a financial advisor is because he had a lot of pressure to push a specific type of product that, arguably was suitable, but wasn't necessarily in the client's best interest. So when you're taking meetings, when you're considering working with a financial advisor, or if you already have one, ask them, are you a CFP? If they say no, why not? Why didn't you do that? We had a case a couple of years ago where a financial advisor told our client, I gave up my CFP. Yes, I used to be a CFP, but I gave it up. Don't worry about it, because the client had found out that he had lost his CFP license. No one would voluntarily give up that designation. To me, that was a red flag. I think it was a red flag for the client as well. But at the end of the day, Series 7 baseline, CFP, that's where those are the guys who have been in the business for a long time and have that knowledge base that you really want. You're handing over your life savings to somebody. Let's make sure they know what they're doing. Let's make sure their duties to you are in line with what you expect, which would certainly be, I think every client who calls us, the expectation was that the financial advisor was looking out for them. I don't think any financial advisor sits down and says, hey, I'm going to make recommendations that are suitable, but I'm also going to make sure that they pay me well. I don't think that any broker has ever had that conversation. So, let's make sure that the advisor you're meeting with actually has the same objectives that you think they do. And CFP would be a good one to check on. Make sure they've got that. And if you want more information on how to become a CFP or what the requirements are to become a CFP, check out cfp.net. And that sort of breaks it down and shows you in great detail why the CFP is so significant and why that's the type of financial advisor you would want. And again, if your broker doesn't have one, but it's because they've been in the business for 4 years and they're working on it and they're taking the test soon, maybe that's not a red flag for you. But I do think that's an important question. And the other place where you can find that information, or you can even find out, how they did on their Series 7, you can find out their pass score and how many times it took them to take it. These might be red flags for you too. If the person took 4 times to pass the Series 7, you can find that information on what's called their FINRA broker check. And I know I've mentioned this in past episodes, but that's the one thing I wish every investor knew, which is the existence of this FINRA broker check. And that's going to be at finra.org, FINRA.org. Top right hand of the page, it's going to say broker check, and you can type in your broker's name, pull up that report. That report's got all the information that you would want to have on your financial professional. It's going to have how they did on the licensing exams, including that Series 7, how many times it took them to pass it, whether or not they've ever declared bankruptcy, been charged with any kind of crime, have they ever been sued by a client, have they ever been investigated by a regulator. All that information's on their broker check. And again, I wish every investor would look at that before they work with somebody, or if you're already working with somebody, go look them up. Because the reality is, if you've got a broker who's been sued 30 times, that's not somebody you want to trust your life savings with. And if you knew that information before you got involved with them, you probably wouldn't be with them. So, so that's some information I wish people had. When we come back, I'm going to dive into some war stories. There's been some chatter on our website that people would like to hear sort of the types of cases that we see, and give me an example of something that you've seen in your years of doing this. So when we come back, that's what we're going to do.
The kids are back in school and fall sports are in full swing. You're probably finding that the laundry is stacking up a lot faster than ever. Sunshine Laundries is here to help. Hi, it's Tom Rhodes, owner of the Sparkling Clean Sunshine Laundries. We have lots of big load machines, so you can wash more clothes at one time. And our dryers start hot, stay hot, and dry fast. Check us out at sunshinelaundries.com for locations and special coupons and offers.
Sunshine Laundry, a member of the iTex trading community. Your iTex dollars are welcome.
You can trust Sandpiper Pest Control, serving Indian River, St. Lucie, and Brevard. Certified by the state of Florida to treat homes, lawns, and termites. Fully licensed and insured. Priced right, effective, and friendly.
Hi, this is Joel, the owner of Sandpiper Pest Control. Sandpiper can solve your pest issues. No contracts to sign, just results.
Call for a free estimate, 772-589-0204. Sandpiper Pest Control, a member of the iTex trading community. Your iTex dollars are welcome.
If you wonder what to do, we got a magazine for you. Stay in the loop and get the latest scoop on the great Vero scene. Make it your routine. Pick up the first, the only Vero Beach magazine.
From amazing articles to ridiculously delicious recipes, along with the scoop on every event in the area, Vero Beach Magazine has been the trusted source for all things Vero for over 17 years. Subscribe today or come visit our newest venue, Vero Beach Magazine in the Village Shops.
Pick up the first, the only Vero Beach Magazine.
Pick up your copy today and visit VeroBeachMagazine.com.
Welcome back to Wall Street versus Main Street. I'm your host, Dax White. Today we've been talking before the break about the different levels of accreditation for becoming a financial advisor and what's some of the, what's the lowest bar, what's the highest bar, and why that's significant in terms of picking who you're going to trust your entire life savings with. As I mentioned before the break, we've had some requests through our website, which is at wallstreetvmainstreet.com. That I sort of dive into some war stories and talk about the types of cases we deal with. So the garden variety case that we see is typically one of two things: either just a negligent situation where the broker made a mistake. Maybe he thought that the energy market was going to do great and over-concentrated a portfolio for an investor and at a time where, if you've been following it, energy has been hammered over the last year. And maybe there wasn't anything nefarious there, but that was certainly a bad call. And there's requirements in terms of suitability and how to allocate portfolios. And it would depend. If you've got a 35-year-old doctor who's making $500,000 a year and he's got a $200,000 portfolio and he told the guy, I want to be aggressive, then over-concentrating in energy might have just been a bad call, but that's not necessarily negligent. Maybe that is in line with their objectives. But if you've got, a 75-year-old retiree who's looking for income and the advisor set up an over-concentrated portfolio in energy because there's junk bonds out there that are paying 7-8%, and he thought he could get some more yield, and that person gets hammered by the energy market, well, now you're talking about something that probably rises to the level of negligence, just based on, again, what are the suitability requirements when making a recommendation for an investor. And again, those are age, income, investment experience, investment objectives, net worth. And again, if you've got a retired investor who maybe they've got $1 million portfolio and they need $40,000 or $50,000 a year to live on, a portfolio that's got 60, 70% of that in energy with a huge exposure to that sector. And then depending on the types of investments, maybe they're all equities, maybe they're options, maybe they're, junk bonds. Now you're talking about something that maybe that's a negligent portfolio. And if that investor loses money, that's something that we can probably help them with. The other types of stuff we see are fraud, where it's actually a financial advisor who is seeking to defraud an investor either by making specific misrepresentations to put them into a product that doesn't make sense but pays the broker very well, or maybe they're dumping their bad investments on clients. Maybe they've got an undisclosed relationship with the investment sponsor that they're pushing to a bunch of clients. Maybe it's a Ponzi scheme. Those are other types of stuff where we get involved, going after the brokerage firm that was that had the responsibility for supervising that broker who's doing that. And so, it's usually one of those two things where it's either just a negligent situation where they screwed up, and that's why they have errors and omissions coverage, most of them, to cover that type of thing, or where you've got somebody who's actively committing a fraud. From my perspective, I take more satisfaction. I've done both. I've represented brokerage firms and I've represented investors. I much prefer representing investors across the board, regardless of the type of case, just because I took no pleasure in representing brokerage firms and sort of screwing the client again, or helping the branch manager increase his bonus by paying out as little as possible on these types of claims. So regardless, I prefer being on this side representing investors. But when it's a negligent situation, maybe you've got a younger broker who got in over his head, didn't really understand, some of the things that are happening in the economy from a macro standpoint. and just sort of overexposed their client, but didn't mean to. They weren't looking to take advantage. I still am a strong advocate for my client, and they still deserve compensation. But I take much more pleasure when we're talking about fraud, and I feel like I'm policing the industry and removing somebody who should not be out there selling securities to people, who's not following the rules and who's actively trying to take advantage of people to take advantage or to pay themselves more. And that's generally where we see. I mean, most cases, that's the nexus. That's the connection, which is the connection between the commissions and the greed. If you've got a high commission product and a broker who's trying to take advantage of that by pushing products, by misrepresenting them and saying, hey, this is going to provide income. This is very conservative. Don't worry about the literature. Don't worry about the disclosures. They have to say that. Trust me, this is a great product. That's where we see the majority of our cases, whether they're private placements or non-trade REITs or oil and gas limited partnerships, mutual funds even. It depends. The product is not usually the nexus of the case. It's the commissions. It's why was that advisor making that recommendation? Why were they pushing that product? And the answer is usually because they could sell that to you for 7% commission, and let's say it's a $100,000 investment, and they're making $7,000, as opposed to, a blended portfolio where maybe they would have made $1,000. And so you've got somebody who's trying to really maximize their commissions at the expense of the client. That's the garden variety case. But in terms of the war story, which is what people had requested, I'll just go into one. It was one of the first cases I ever worked on. I was working for another lawyer who does exactly this type of work. And he told me at the time, he said, look, they're not all usually like this. This is this one's really egregious, but it still sort of sets the bar for me as just, wow, like I can't even believe this kind of thing happens. But it was a financial advisor at a large firm. He was actually the manager of that particular office, and he had a gambling problem. And unbeknownst to clients, when he needed to pay his bookie, he would go into client accounts and transfer the money from their account to the bookie's account, who also had an account at that same firm. And then he was sending out fake statements to hide what he was doing. And this went on for several years before he finally got caught. We got involved. It was more convoluted because some of the clients that were being taken advantage of were his wife's parents. So you had like a family dynamic. But it was just it was a crazy situation. I mean, but that's the extreme where that's obviously fraud. That's a situation where somebody's taking advantage. And there were so many nuances to the case that made it even more interesting than our just like garden variety case. We did investigate the financial advisor to see if there was a pattern. One of the elements of these types of claims is supervision. So is there something that the brokerage firm should have picked up on years before? They're going to argue, well, how do we know that he's sending them fake statements if he's doing it from his house or whatever? How could we have known he was doing this? And so again, we're looking for red flags. And one of the red flags in that particular case was that he had been charged with defrauding an innkeeper, which is a very innocuous, charge. Like, who knows what that means? But we came to find out that it was actually because he had run up a $40,000 bill at a gentleman's club and refused to pay it. And then the very next day, to pay that bill, transferred money from our client's account into his account to pay it. So again, that's the extreme example, but that's the kind of stuff that we see on a daily basis where, again, the industry, it's not like anything else. There's good financial advisors, bad ones. I know plenty of great financial advisors that take care of their clients. We see the worst of the worst. That's for sure one of the worst of the worst, but that's the kind of stuff that we see. If you want more information just generally on our practice or on, the information that I think is important to investors as they, embark on a relationship with a financial advisor, check out our website at wallstreetvmainstreet.com, or you can go to our law firm website, which is whitesecuritieslaw.com. And if you have questions, feel free to send them to us and we'll try to answer them in an upcoming episode.
You've been listening to Wall Street versus Main Street. The views expressed by the participants of the program are their own and do not represent the views of, nor are they endorsed by, the White Law Group, its officers, directors, employees, agents, representatives, shareholders, nor any of its subsidiaries. None of the content should be considered legal advice. As always, consult a lawyer.